All right, so tell us why the markets have been all over the place.
Well, we're at a bit of an inflection point right now. Omicron has put a bit of a dent in economic growth, at least for the short term. And 2022 is going to be a year where the Federal Reserve starts to raise the cost of money. They're going to raise interest rates higher. One of the things that really pushed the market up over the past year and a half or so has been ultra low interest rates. And so it's just a little bit of turbulence. But I would focus on the bigger picture, and that is this. The reason interest rates are going up is because the economy's in much better shape. Unemployment's below 4%. People are spending money. Over the long term, those are the type of fundamentals that are ultimately going to be good for the stock market. So you just have to maintain that long-term perspective.
Okay, that's a good positive way of looking at it. So tell us, will things become more stable soon? How long are we expecting things to continue on this roller coaster?
Well, I think just 2022 is going to be a choppy year. And let me also say that market corrections, when the market drops by 10% or so, that we tend to get on average about once a year. We haven't really had that in the last almost 2 years. So we've been really overdue. Last year was really abnormal. The market went up 27% and almost had no notable pullbacks during the year. That's weird. What's more normal is to see the type of correction that we're seeing now about once a year. We've been overdue for that. Given the inflation picture, interest rates going up, geopolitical issues with Russia, Ukraine, China, market volatility, we're going to be on a bit of a roller coaster ride, but I wouldn't let that short-term volatility distract you from your long-term goals. Oftentimes, the best thing to do, nothing.
Just hold tight and wait. All right, so talking about interest rates, what role does the Federal Reserve meeting have in all of this? We just heard in a story before your interview that they're expected to raise those rates some 4 times this year. How is that going to impact people at home?
Well, your biggest impact where you're going to feel that is on the cost of borrowing money. Mortgage rates have already increased almost half a percentage point from where they were in late December. So refinancing, buying a home, it's a different equation now. And then as the year progresses, credit card rates, home equity lines of credit, any variable rate student loans you have, those rates will notch higher as well as the Federal Reserve raises those benchmark rates. So important to game plan now. Because your debts are only going to get costlier as time goes on, you want to lock in fixed rates while you can. Grab something like a 0% balance transfer offer on a credit card to insulate yourself from those rate hikes and put yourself on a runway to get that debt paid off once and for all.
Okay, so if you have a big purchase that you're planning, you should probably get it done before March would be the smart thing to do?
Well, what I would do is grab one of those 0% offers. They offer those on purchases as well. So if you've got a big purchase coming up, it's something you can put on a credit card. Get one that's got one of those 0% periods for about 18 months. Then you give yourself the ability to pay that off over time without the headwind of interest or having to worry about rates going up.
All right, Greg McBride with Bankrate. We really appreciate you coming on and giving us your expertise as always. Thank you.